Hello, in this video, we're focusing on the practical concepts that you can actually apply in the real business world. Hope you enjoy it. Let's get on with it. Welcome, and thank you for joining today. We're going to explore how to effectively manage your cash flow with a 13-week rolling forecast, which could be a key tool in maintaining your business's liquidity. Throughout this presentation, I'll guide you step by step to help you understand why forecasting cash flow is essential, how it works, and how you can use it to stay ahead financially. Let's get started. A 13-week rolling cash flow forecast is an essential tool for small and medium enterprises, as it provides early insight into potential cash shortages well before they impact a bank account. By updating it weekly and comparing it to actual cash flows, the forecast helps identify funding gaps or possible covenant breaches up to 8 to 13 weeks in advance. This advance notice allows businesses to take proactive steps, such as accelerating collections, rescheduling payments, or arranging additional credit to avoid pressure situations. Over time, maintaining this discipline not only improves forecasting accuracy, but also builds confidence among lenders and boards, since controlling short-term liquidity is critical for SME survival. For example, the summary dashboard includes key drivers and assumptions, along with a graph showing the closing balance against the minimum cash threshold, highlighting any areas of concern. Additionally, the detailed forecast includes management comments and suggested actions, making it a practical tool for ongoing cash flow management and decision-making. Let's take a moment to focus on the 13-week rolling cash flow forecast. This tool is essential for maintaining a clear picture of your cash position over the coming weeks. By regularly updating the forecast and comparing it to actual bank transactions, you can spot any potential shortages early. This allows you to plan ahead and make informed decisions, such as adjusting expenses or securing short-term funding to avoid any surprise cash crunches. Keeping this forecast accurate and current ensures you stay one step ahead in managing your business's cash flow effectively. Let's continue by looking at the ongoing monitoring of cash flow over a 13-week period. This rolling forecast is updated regularly to give the most current view of expected cash inflows and outflows. It helps identify potential funding gaps early, so adjustments can be made sooner rather than later. Keeping this forecast accurate and timely means better control over financial health and more confidence in managing day-to-day operations effectively. If you want to learn more about implementing a 13-week rolling cash flow forecast for your company, feel free to get in touch with David Whitaker. You can reach him by email at david@shareholder-value.co.uk or by phone at +4 794 9008 093. He can help you understand how this forecasting tool can give you early insights into cash flow challenges and help your business manage finances more effectively. If you found this video useful, there's plenty of more business and finance videos on the channel that you'll enjoy watching and get great practical value from. In the meantime, thanks for watching.